Hello traders, Cousin Vinny coming to you from theclosingprint.com on December 22nd, 2019. In this edition of your weekend video newsletter, we'll discuss the indices, all of which seem extended, closing higher last week with the exception of the international indices where we see the Nikkei moving a bit lower. The Hang Seng, the Bombay, and EEM were all higher, as well as the London Stock Exchange. All of the FANG stocks were higher in addition to Microsoft, Intel, and Tesla. Bond stock ratio is bullish. HYG and Junk, though at highs, pulling back a little bit, are still bullish. The Dow Composite is bullish, S&P 1500 is bullish, and XII is bullish and moving higher. Sentiment last week and the week before shows TIC and TICQ for the NYSE and the NASDAQ respectively, moving higher on the 60-minute charts. That is bullish. We need to see a peak at a minimum to consider a potential top or an area where we might see a little more weakness. NIMO and NAMO started a bullish cycle 2 weeks ago. Got into full gear last week. Breath thrusts are bullish. The NYHL spiked to a high that we haven't seen since 2010. And the New York Stock Exchange advanced decline is in a steep trend and moving to all-time highs. The put-call ratio is neutral to slightly bearish short-term at these lower levels. VIX is neutral, fading back to 1251. Bullish percent 65%, and skew is showing that institutions have been actively hedging, as we pointed out over the last couple of weeks. In addition, we saw the US dollar bounce back towards the 200 period moving average. The yen is still below the 200-day, and the British pound US dollar is bearish and moving lower. That had a positive effect on the London Stock Exchange and the FTSE, as we pointed out last week. That continues to show a bullish trend continuation. Bonds, we did see AGG, the Barclays Aggregate Bond Fund, which is what bond traders use as a benchmark, flat near highs. SHI and IEF, the shorter term bonds, are flat and fading, and the TLT continues to show distribution at the current time. The 10-year yield is bullish. That popped higher last week, finishing higher on Friday. Gold is in a 16-week descending channel that got rejected at volume by price. We'll talk about that in a minute. Copper is showing a follow-through. It's above volume by price resistance and moving higher now. West Texas crude for 8 weeks back above the 20-period weekly moving average. We saw the sectors improving last week with oil, gas, and equipment, energy, USO, UNG all moving higher. International markets are improving as well. Argentina continues its bullish run that we pointed out several weeks ago, in addition to Brazil, Chile, Mexico, and of course China and some of the Asian ETFs moving higher. We'll look at some IBD 50 names showing relative strength in bullish trends. We also look at some MarketSmith Growth 250 and the top 20 volume percent gainers for the week ahead. Bukowski's showing 5 of 5 green with a CPI signal green since December the 4th at 94.2%. That's bullish with 3 bearish patterns, 49 bullish patterns, and more importantly, 253 patterns waiting for breakout this week. Starting off, we have the ARCA Institutional Index. You know this as the 75 stocks most commonly held in institutions' core portfolios. The important thing to note here is we're at all-time highs. What we're looking for here is an indication of weakness that will come on a blue or red elder stick, a loss of the standard deviation 1 bands, which is the dark area, on a blue or a red stick. A second red stick would be a sell signal and something that we've been watching for over the last several weeks. For now, momentum is still clearly with the bulls, and these stocks look like they're going to continue higher. They are extended, so I wouldn't be surprised to see a little bit of a pullback in the short term. That said, we need to see it first. The S&P 500 Equal Weight Index, literally no stock is more important than any other by weight. We broke out of this ascending channel pattern. We thought we might see resistance like we had back here in late November, but we kept pointing to the fact that breadth was moving sideways. It wasn't overbought in the red zone. We started trending higher now, so there is a potential for this to embed, CCI to embed above 100, and for price action to continue higher. We are anticipating that we could see a little pullback, however, or a flag or sideways consolidation like we've seen previously on several occasions before moving higher, as the 50-period moving average is hustling very quickly, as well as the 21-day moving average in orange. When we discuss the number of stocks trading above their 50-period moving average in the previous chart, that also shows up as breadth continues to improve, but not at the 30% level and overbought. So we have room to improve. The upper panel, S&P 500, S&P Midcap 400, S&P Small Cap 600, and the NASDAQ 100 in the lower panel, all have potential to move higher first going into the holidays. The significance in breadth was also pointed out in NIMO, which bottomed 2 weeks ago. The NASDAQ is giving us the same sort of picture, nowhere near a peak yet. The acceleration just started 2 weeks ago. NAMO is improving. Price action showing green elder sticks, showing potential for continuation. NASI also accelerating higher, but giving no indication of a peak going into the shortened holiday week. That said, we do have the Russell 2000 moving higher. This is a risk-on indicator. Our target was 170. RSI suggests there's still room to the upside before it gets overheated. We have the 20 and the 50-period moving average both turning up sharply. Volume increasing, MACD above its signal line, and rising. The bulls are in control, and this risk-on indicator suggests there could be more upside before we peak out, potentially at 170, creating a potential double top. Not to sound too bullish, we want to make sure that we keep an eye on VIX, which is giving us a neutral signal. It's slightly green, but flat going into Monday's trading. So we keep pointing to potential for a spike in VIX. We don't see a catalyst just yet, but there is a possibility that we could start rising now. The probabilities are that we might move higher over the next several weeks for whatever reason. We'll have to see it first. Otherwise, we are looking at complacency down at this 12 level that we've seen over the last week. And as we mentioned in the opening monologue, we did see skew remaining above 135 all week, as we saw back in 2018 in July and August before the markets topped out in September and the Fed got hawkish. This indicator pointed to the fact that institutions were hedging, so we have to keep an eye on that going forward. In addition, we have to remember that tick cumulative continues rising. If we do see some pullback, we'd need to see tick cumulative roll over on the 60-minute time frame to make us believe that we could see further downside. Otherwise, if this continues to rise, it would lead us to believe that any pullback will most likely be bought. So keep an eye on tick. We'll keep you updated during the trading day on Monday as the trading day unfolds. This is the S&P 1500. This is the S&P 500, the S&P Midcap 400, and the S&P Small Cap 600. Continues to be on a buy signal. Histogram is confirming, and price action continues rising. Note the Bollinger Bands are opening up, showing volatility is increasing as price rises. In addition, we did see NYHL, new highs minus new lows, spike to a level we haven't seen since 2010. I will note that back in 2010, we did pull back about 3 to 4% once we saw a spike of this magnitude. The difference is there is a very large base that we just came out of compared to 2010, where we had a one-year run up to that point. Looking at bonds, we see the S&P 500 weekly in the upper panel. Note the green elder sticks. Bond stock ratio suggesting as it continues to move lower that equities are favored over bonds. The moving average, as we've pointed out repeatedly, is flat, starting to show signs that it could be moving lower like it was back in late 2016, early 2017, with the ratio following lower, which would be bullish for equities if that continues to do what we're anticipating. As the 20-year continues to show what appears to be distribution after a 12-month run from October of last year, where we initially got long bonds. We've since exited our TLT position. I do have a position in AGG, the Barclays Aggregate Bond Fund, which is holding up much better for the most part. Still looks like a triangle pattern. We're watching what happens here, whether it moves higher or lower. MACD continues to drift. We did see elevated volume on the sell side 2 of the past 3 weeks as the 10-year yield continues to move higher. This would be bullish for equities if we get above 2% and start rallying, similar to what we saw back in 2012 and 2016. And something that Chris Shavako also pointed out in his weekend analysis back in 2012, 2016, and prior to that in 2009, as multiple expansion came into play. The 2012-2013 period is very similar to where we are right now. Also note that we had this big base that we're just now breaking out of. As Chris had pointed out, these sideways consolidation patterns, when multiple expansion kicked in, we saw 21 years of expansion. Then we based again, and then during the baby boom generation, we did see a follow through for 16 to 18 years as multiple expansion kicked into high gear. And right now we're starting a period where the millennials point to a similarity in the trend that we're seeing currently unfold. So watch the yearly chart. This was also very enlightening. In the periods between consolidation and breakout, we're only on year number 7. And something to keep in mind when positioning in your portfolio in the years ahead. High yield corporate and junk bonds continue to rise. They seem a bit extended. We've hit this trend line 4 times now and moved higher. So this next wave at this upper Bollinger Band could follow through, but watch yields because this generally gives you a heads up in the markets when yields do move lower like they did back in September, October, November. It gave you a heads up before the market actually turned down in 2018. So this is something we're watching very closely, HYG and junk. The latter giving us something of a shooting star or gravestone doji kind of look on the weekly time frame. So we're very curious to see how junk, a higher risk asset, a risk on indicator of sorts, if this starts to move quickly back towards the mean at the 21 period moving average, then we would consider a potential short-term reversal or some drawdown in the short term going into the end of the year. So watch junk, very important this week. In addition, we want to keep an eye on currencies. This is the British pound US dollar, of course, with the elections out of the way. We did see the British pound dropping last week, which did help the FTSE. Starting on Monday, we just continued higher through the 21-day moving average. We're now a little bit overbought. We're looking for some resistance up here around 7,800. If you happen to be trading the London Stock Exchange or the FTSE, look for some short-term strength into this level and maybe a flag or a slight pullback in the first weeks of January, as volume suggests more upside potential. The US dollar, of course, continued to rally as the pound moved lower. We did see the US dollar come back up towards the 200 period moving average. It looks like it started to get rejected just shy of that level. Do note the 50 period moving average has turned down. We could see a 5200 day cross. If we do get some rejection up in here and the dollar moves lower, we could see commodities moving higher That also would create a tailwind for equities for a potential move higher. So there's a lot of moving parts coming into this week. If you're bullish, you want to see the dollar moving lower. Compounding those bullish tailwinds, we also see copper moving higher. This is a leading economic indicator. We saw strength in a lot of builders and construction names last week, so look at that group if you're thinking about trades. Copper is moving higher. It moved above this volume by price band. This is now support. We were also watching for resistance at this volume by price band in gold. This descending channel that lasted 15 to 16 weeks is trying to push up against this level, but it did close in a doji on Friday, spinning top. So as Bollinger Bands tighten up, a big move seems to be coming from gold, so watch this very closely if you're thinking about trading it. A pop to the upside would force those commercial traders to cover their shorts. They had something like 320,000 short contracts as they were looking for this pattern to move lower into the end of the year. So if that were to break out, those shorts would be forced to cover, and we could see a significant move in gold, especially if the dollar drops off into year end. So with all these moving parts, we're also watching West Texas crude and Brent. Bullish for equities if crude continues to move higher. Note the volume, MACD's above its signal line and rising. Bollinger Bands are opening up. As we continue to rise near $63 a barrel, should crude continue to move higher, that would be a bullish signal for equities. Spider sectors are above their rising and bullish 20-day and 50-day moving averages. The only sector that was lagging last week that managed to reverse and close near the 50 period was real estate. That's improving. We're looking for a breakout. This happens to coincide with the 200 period moving average just below. So look for improvement. Some of these are quite extended and could come back a bit. Healthcare is trending, and consumer discretionary is starting to flag. Transports, nice bullish candle on Friday, and we have moving averages turning back up, supportive of price action. Here is the IBD 50 list for the week. What we're looking at is a lot of stocks extended far above their 21 period moving average. Some of these could pull back. There are many of them, however, that are breaking out of nice little basing patterns over the week, like Air Lease, for example, coming back to the 9 EMA on Thursday, following through. Buyers stepped up to the low of the day on Friday. Volume increasing, MACD above its signal line, and we see standard deviation turning up from a low level with potential for this to rise before it gets to overbought conditions. So this next wave up could see 48.97 in the short term as RSI rises and gets into the embedded zone, showing that there's a lot of strength in this trend. Previous watch list stocks like ACGL also looks good. CBRE, CB Richard Ellis, above average volume on Friday. This is a REIT. Remember, real estate is improving. Came back to the 9 EMA, found buyers very strong on Wednesday, inside day on Thursday, followed through on Friday. MACD's above its signal line, and we have standard deviation turning up as well. MACD above its signal line and volume increasing as RSI rises. These real estate REITs should continue to push higher this week. I'm very curious to see how CARG sets up this week. It's right at the 200 period moving average. RSI could either move a bit lower before getting oversold again, which means price action could come back down to the 200 period EMA, or we could see RSI turn back up if price action does get back above the 21 day and start trending higher. If that were to occur, I would be looking for 40.46. So watch how CARG trades in the short term for potential entry. Remember we talked about XLK flagging sideways, breaking out last week. Technology could continue higher. CDW almost touched the 9 EMA last week on Wednesday, followed through on Thursday and Friday. RSI is just now getting to overbought territory. MACD's above its signal line and volume spiking on Friday as standard deviation continues to show that we're moving further away from the mean. There is a potential for us to pull back. So we're watching CDW very closely along with a lot of technology stocks to start the week. Chipotle and many of the stocks in this group should continue to do well as holiday shoppers are out there spending money. The stock is trending. It came down to the 21-day 2 weeks ago towards the end of the week, followed through on Monday, Tuesday, Wednesday, back above the 9 EMA and pushing higher. We're looking for a test of all-time highs. RSI suggests we could get there as it has room to run. Volume picking up, MACD is above its signal line, and we see standard deviation turning back up as we're moving away from the 9 EMA. Columbia Sportswear, huge volume on Friday. We're very curious to see how this handles the 102.61 level. As stocks in this group, like Lulumon, which bounced back above the 21-day and the 9 EMA, looking very strong on Friday. More than likely, this is headed back up to highs. It's trending nicely. Every time we saw a candle similar to this, like back in October, it led to higher prices in the short term as RSI suggested and continues to suggest going into this week that we could see higher prices. MACD's turning, volume increasing, and standard deviations turning back up. Look for Lulu to continue higher this week. We were also looking for Copart to move higher last week. We did briefly on Monday and Tuesday pull back to the 9 EMA, but buyers showed up right at the 9 EMA. So we finished higher on Friday. Look for a follow through. If we do get a bullish candle on Monday, it could signal that buyers are present. Volume was way above average, the best we've seen all year long for Copart. So look for a follow through this week. MACD's turning and standard deviation is showing that there is plenty of potential for upside as we move away from the 9 EMA. It's telling you that we're not at extremes yet and potentially could see a pretty big pop in the short term. As we mentioned when we talked about copper being a leading economic indicator, or watching some of these builders like D.R. Horton, reversal, almost a hammer pattern, almost a hammer on Thursday. Big bullish candle on Friday on volume. MACD's turning and standard deviation turning back up. Other stocks in the group like Navient pulled all the way back to the 200 period moving average, nearly touched it on Friday, giving you a nice opportunity here. If builders start to turn, watch Navient. This one could set up for a nice trade if we do see a bullish trade on Monday. Lennar is another favorite. Almost a bullish engulfing candle on Friday. RSI oversold and improving. If this does follow through, it could lead to more gains in the builders. We saw the same thing on Toll Brothers. Almost a hammer on Thursday, followed through on Friday, indicating that institutions might be buying the builders in the short term as copper continues to project higher prices. With the same thing on LGIH, this one occasionally shows up on the IBD 50. Look at the volume on Thursday and Friday. This hammer on Thursday, follow through. Maybe we get through the 21-day. It's something we're watching this week. Watch all the builders. Definitely set up RSI improving and rising going into the last 2 weeks of the year. Floor and Decor, certainly in this space. Decking and Building Products Group. This continues to trend above the 9 EMA. Came down and tested it Tuesday and Wednesday. Buyers stepped up. Trending nicely. The 21-day is rising. The 9 EMA is right above it. RSI suggests there's room to run. Volume showing institutions have been active, though a little bit sneaky. MACD's above its signal line and rising, and we got standard deviation turning up, telling you that this could extend a bit more, maybe test 53 in the short term. Genpack is back, RSI rising. We got a breakout above these pivots. Could be testing this 44.36 level in the short term. 9 EMA is above the 21-day. MACD is above its signal line. Volume above average. Pocket pivot. Standard deviation climbing, but not extended, telling you we could see more upside in this new bullish wave. As we pointed out over the last couple of weeks, we're looking for a breakout of this descending trend line, of this descending pattern. RSI is rising in L3 Harris. Above average volume on Friday, MACD above its signal line and rising. We're looking for RSI to point the way. Looking for a breakout this week. Watch for LHX to do something this week. Microsoft last week came right down to the 9 EMA and tested it. Buyers stepped up en masse. We got a nice bullish follow through on Friday. A little doji. Look at the volume. MACD's above its signal line, and we do see a potential for standard deviation to continue higher before getting extended as we push away from the 9 EMA. I would really like to see a little pullback, a little flag to get into Microsoft. We do have RSI showing muscle, so this one we'll watch very closely this week. Maybe we'll get a trade on Microsoft. ServiceNow also looks very strong. Note we came down to the 9 EMA several times last week. Buyers stepped up. We're testing this flag and this potential breakout zone. Looks very strong. 21-day is rising. RSI suggests there's more upside. MACD's crossing. Volume's increasing. If we do get through 284, look for a test at 303 in the short term. PayPal and the other payment processors like MasterCard, Visa, we're watching these as well. Could break through this level and start trending. RSI is above 50. Keep an eye on these in the short term as MasterCard and Visa continue to trend. Came down and tested the 9 EMA. This bullish trend intact. Volume above average. MACD above its signal line. Looking for MasterCard to continue higher this week. Visa testing these highs. Looking like it's going to just keep going. Having tested the 9 EMA on Thursday. Big bullish candle. Volume on Friday was really nice. Buyers stepped up at the low of the day, creating this hanging man candle. RSI suggests more upside. As it rises, MACD is above its signal line, and we do see standard deviation moving higher, not at extended levels, so this next wave up could be a test of 190. The ATR3 bands overhead with RSI suggesting more upside before it gets overbought. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com. I've cut this video a little bit shorter than usual only because it's the holiday week and I want to spend time with the family. Do check out the stocks that I didn't cover in the IBD 50 in addition to the Market Smith Growth 250 names showing relative strength and the stocks in the top 20 volume percent gainers. All of these look good. They're on the list for a reason, so check those out individually. Look for stocks that are above their 9 and 21-day moving average, and those averages are bullish and climbing. Also look for RSI to suggest there's more upside. Okay, I'll send out a watch list later tonight, 11:30, 8:30 on the West Coast. Otherwise, have a great holiday if you're not trading this week. I hope this helps. Take care, and we'll talk to you soon.